Welcome to Protect Your Assets Market Briefing. I'm your host, David Hollander, also known as the Sandman. Now let's get started. Is inflation coming back? The Dow was up 1.7% this week. S&P up, well, almost 1%. Year to date, we're up over 9% on the S&P. Think about that, 9%. If you bought some of those tech stocks in April, you're feeling really good right now. NASDAQ up a little bit as well, not quite 1%. MSCI International, 1.4. Remember talking about neutral? Oil, down 1.2%, 63.13. The Trump-Putin Friday didn't go as expected. If it did, oil could have gone down even more. So $63 is where we are right now. But what happened this week? We had a little bit of a surprise on the inflation front. This was the producer price index on Thursday that came out. You may have heard about this. What does that do? Well, it surprised markets, first of all, because the month-over-month increase in inflation was 4 times what the market thought. And why is this a problem? So people were talking about it. It was sort of a big deal that day, and we were wondering, well, what's the big deal? The market's still high. But right now, remember, there's a few pillars that support this market, and kind of like a 3-legged stool. If one of those legs falls out, well, the stool falls down and so do you. So let's look at them, shall we? The first is inflation. That's the first pillar. And the producer price index usually comes out ahead of the consumer price index. And so we saw that this resurgence of the cost to wholesalers to produce stuff went up a lot. In fact, it was one of the biggest we've seen in quite some time. And so that was a surprise. Not enough to dissuade anything, as you can see from the performance numbers I just read for the week, but still a surprise, and it's out there and something the Fed's going to think about. The second pillar, which is supporting this, which I'll have more in a moment, is the Fed cutting rates at their September meeting. So we'll come back to that. Pillar 3 is the corporate earnings. They're seen growing solidly next year as a result of decent work environment, labor strong, lower interest rates, all those sort of things. But if we get a price shock like we just saw, and that starts to creep into the third quarter earnings, those higher input costs, this is what it costs people, businesses to make things. Well, that could show back up in the price of things that we buy, as companies would pass those increases on to consumers to keep their margins healthy for their future predictions of their company. And that will drive prices higher, which would make the consumer less likely to spend money. So that's the cycle. That's what's happening out there, and that's what the market's a little worried about. Now, coming back to where we finished the week and where we are right now, in my opinion, I think overall it looks more like the Fed's going to cut rates on September 17th. And overall, inflation is coming in less severe than, of course, was feared broadly. And the labor market is showing some signs of cooling off a little bit. But overall, the jobless claims and unemployment remain low historically, and corporate profits and GDP continue to grow at a pretty healthy pace. So as long as that all stays on track, we're looking pretty good. And last week's outperformance of small caps up 3.64%. And remember, we talked about small companies being sensitive to rates due to their reliance on debt financing. So that's why they had a pretty decent week there. Value stocks up 1.58%, and the equal-weighted S&P 500 up 1.79%. May show that things are broadening out a little bit, not just focused on the Mag 7. Next week, I'm going to be paying attention to Chairman Powell. He's going to be speaking at the Jackson Hole Symposium on August 22nd, and he might lay the groundwork for a cut in September, so pay attention to that. Now it's time to shift to our monthly Bitcoin and crypto update. Bitcoin milestone. Well, Bitcoin set a new all-time high of, get this, $123,231 during crypto week, of course. Bitcoin became the world's 5th largest asset Think about that. Overtaking Amazon with 2.41 trillion market cap. Wow. How about some industry advances? Well, the crypto market surpassed overall $4 trillion for the first time. Charles Schwab, CEO, confirmed the company will launch Bitcoin and Ethereum trading, quote, sometime soon, end quote. JP Morgan Chase, they teamed up with Coinbase to introduce crypto integrations to its consumers. What does that mean? The bank said it's looking at whether to let clients borrow cash against their crypto holdings. 6, PayPal launched Pay with Crypto. This is a new service that lets U.S. merchants accept 100 plus cryptos. U.S. banks, this is U.S. Bank, the actual bank, U.S. Bank, completed its first fully digital trade finance transaction using blockchain technology. Very interesting. And Jack Dorsey's Block XYZ. No, Jack Dorsey's Block. I need glasses. Block XYZ entered the S&P 500 index. That's huge. All right. How about some noteworthy ETF news? These are the ETFs that trade in the crypto space. We had BlackRock's Bitcoin ETF IBIT eclipsing 80 billion in AUM. That's the fastest ETF in 374 days. Lots of ETFs being launched, too many to mention. Of course, remember, you read all your prospectuses about these things before you jump in them. This is, once again, hot, 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 which could mean down, down, down. So just be careful, okay? Be careful. Multiple issuers filed, including Trump Media and Technology Group. U.S. regulatory moves. The House passed the Genesis Act, the Clarity Act, and the Anti-CBDC Surveillance Act. President Trump signed the Genius Act. It's now law, while the other two advance to the Senate for more debate. President Trump plans to sign an executive order that would open the U.S. 401k retirement system to investments in crypto, gold, and private equity. That's very interesting. The SEC announced Project Crypto, an initiative aimed at modernizing securities laws and putting Bitcoin and blockchain innovation at the center of America's financial future. The Fed and U.S. regulators issued a statement saying banks are allowed to custody Bitcoin and crypto. Senator Loomis introduced the 21st Century Mortgage Act, which would require Fannie Mae and Freddie to consider crypto as an asset in mortgage risk assessment. Governor Newsom of California, good job, Gavin, launched California's Breakthrough Project, where uniting tech firms like Ripple, Coinbase, and MoonPay to modernize public services using blockchain technology. And foreign headway: EU, England, Russia, South Korea, Hong Kong, Thailand, Vietnam, the UAE, Pakistan, Kazakhstan, I think I said that right. Kazakhstan, there you go. Ghana, Nigeria, Philippines, Bolivia, and Zanzibar all took steps towards backing or advancing digital assets and blockchain technology. That's your update.
You can hear the Protect Your Assets market briefing on your favorite podcast app or as an Alexa flash briefing. Just search for Protect Your Assets market briefing. Links to subscribe free wherever you listen are at libertygroupllc.com/PYA briefing. The following program is paid for by Liberty Group, and the views and opinions of the host do not represent those of the station or its ownership. Investment advisory services are offered through Liberty Wealth Management, an SEC-registered investment advisor. Legal information provided on the air is not intended to be a substitute for callers hiring their own lawyers to advise them about personal legal matters. The information provided is general financial comment and cannot be relied upon for your specific financial situation. Investing involves risks, including the risk of loss of your investment. Please consult with a financial professional before investing. California Life Agent number 0B48569. You're listening to the Protect Your Assets Radio Network.